Hello, everyone, and welcome back to the Common Sense Crypto channel. As with you always, this is Rich doing another video today. So I hope you're all having a wonderful day today, wherever you are in this great world. We're going to talk about a lot of things in this video. I'm going to start with this. Treasury Secretary Yellen says U.S. economy is performing exceptionally well. Now, nobody believes that. She could have said, well, things are starting to look better. Things are starting to turn around, but exceptionally well, come on. In yesterday's video, I talked about the Great Reset, and people said, you're pushing political views. No, I'm pointing out political facts. And I'm pointing out the fact that with the Great Reset, that plays a factor on your XRP. CBDCs play a factor as far as the price of XRP in the future. But I don't think XRP needs to be tied to such a dark agenda either. It can easily fix the current financial system, along with going back to the gold standard. But nobody wants to fix this system. They want to go off into a new system. They want to wipe out the world's debt at the same time. A CBDC is probably the worst thing that's coming. U.S. banks lost money on mortgages. Now, she just said that the economy is doing exceptionally well, but yet new data obtained by Mortgage Bankers Association has revealed that U.S. banks have lost money for mortgages they financed for the first time in history. Moreover, both independent mortgage banks and mortgage subsidiaries of chartered banks lost an average of $301 per loan, according to the report. The data notes the first profit loss on record since the report's inception in 2008. Additionally, the report states that the losses averaged 13 basis points and were brought on by a combination of rising mortgage rates in a short time, low housing inventory, and challenges in affordability. We're crypto investors. We would never buy the top of the housing market either. We would wait for it to come back down and then buy the bottom. But people are still rushing out there and buying houses at an all-time high. JP Morgan CEO Jamie Dimon says banking crisis is not over and there will be repercussions from it for years to come. And I have to agree with them because I think this is just the beginning of something much bigger. And they still say, well, it was just those two banks. They were tied to crypto. That's why they failed. But what are they going to blame the next bank collapse on when they can't blame crypto? That's the big question. IMF warns of international banking collapse and announces CBDC reset because that's what every single country is looking for right now. They're pushing towards a CBDC. And, I believe what's going to happen first, though, is anybody that's holding crypto is going to get extremely rich. But we're not going to be selling our crypto because what are you going to sell it into? US dollars? Maybe you could transfer it over into physical gold somehow. There's going to be options that open up. The one thing I'm so worried about out of all of this is the fact that they're trying to cut the banks off from crypto altogether. If they cut them off from crypto exchanges, how would we cash out our crypto? On top of that, if you wanted to cash out your crypto, what if there's no exchanges left? What if they change the rules along the way? There's so many questions around this, but there's no answers yet because we're not quite there yet. That's what I think the problem is. We could all speculate on what could happen in the future, but nobody knows for certain. And I still feel that somehow, some way, the exchanges are going to be with us for a long time. Elon Musk makes fun of the Federal Reserve, saying World of Warcraft's economy is light years better. The Fed is one thing we should have got rid of a long time ago. I think the problem is they don't want to get rid of the Fed because they need somebody to keep printing that money, keep the money printer on. Other than that, we probably would have got rid of the Fed a long time ago. Robert Kennedy Jr. calls CBDCs the ultimate mechanisms for social surveillance and control. Fed issues CBDC is a hot topic this campaign season. And a lot of people really need to wake up to what a CBDC is. I said in yesterday's video, People outside of crypto don't understand this. I talk to a lot of people, and even when you mention FedNow, they're like, isn't that digital payment system? They don't realize how dangerous it actually can be. And I think people really need to educate themselves on a CBDC before they go into the next election, before they go in to vote. It feels a bit odd to defend the Fed here, but being vigilant against CBDCs also means getting the facts right. Now I'm going to explain about the FedNow. So it's not a CBDC. Astute eyes will recognize that FedNow does vaguely resemble a wholesale CBDC, whereas a wholesale CBDC would be restricted to financial institutions for use during interbank settlement. FedNow would also be restricted to financial institutions. The difference, however, lies in their design. Where a CBDC is a currency, FedNow is a payment rail. If we think of dollars and cents as water, then FedNow is the plumbing that gets those dollars and cents where they need to go. In contrast, a CBDC would involve replace the water itself in this analogy. So later, I believe they're going to introduce that digital currency. Not without objection. Although FedNow is not a CBDC, that's not to say there is no reason to object to it. Faster payments are needed in the United States, but FedNow is not the only option. FedNow was announced in 2019, but that was 2 years after the clearinghouse introduced the real-time payments network. In fact, while not offering instant payments, even just expanding and operating hours of FedWire and the National Settlement Service to run 24/7, 365 days a year would have improved the U.S. financial system. Yet, the Federal Reserve seems to have chosen to ignore the simpler option and walk over to the private sector. Both choices are grounds for fair and long-standing objections to FedNow. So they had an easier option right there in front of them, and they decided to go in another direction. Staying vigilant. While FedNow is not a CBDC, that doesn't mean those concerns about CBDCs should let their guard down. Rather, staying vigilant means working to identify issues as they come up and working to get the facts right, from ending financial privacy to destabilizing the banking system. The risk of CBDCs are all too real. And that's why I said I believe it's a prelude to a CBDC. I think it's going to switch over easily in an emergency situation. That's what I was getting at in yesterday's video. Saudi Arabia is buying Russian oil at record levels and laundering it onto the European market to evade various U.S. sanctions. Moreover, ship tracking data showed traders are stocking the fuel at the Fujairah hub in the UAE and in Saudi Arabia. So it looks like they're trying to avoid U.S. sanctions, and it looks like Saudi Arabia is doing a lot more business with Russia, pulling away from the U.S. dollar. That's why I said when the U.S. dollar falls, we're going to see crypto in the stock market get a blow off top, and that is going to happen. The committee has advised the SEC to aggressively assert authority over virtually all crypto tokens. Now, this is something that we need to talk about because I also feel they're using the SEC to keep people out of crypto at the same time. As the US dollar falls, crypto rises. But they don't want new investors coming into crypto so they can make all that money, so they could get rich. For some reason, they want to keep people out of crypto any way they can. So the U.S. Securities and Exchange Commission Investor Advisory Committee submitted its view on the regulation of crypto assets to the SEC on Thursday. The committee was established under Section 911 of the Dodd-Frank Act to advise the securities watchdog on regulatory priorities. In their letter to SEC Chairman Gary Gensler, IAC Chair Christopher Mirabile, and Vice Chair Leslie Burskirk explained that they are submitting the view articulated as a consensus of IAC members. They wrote, "We believe that virtually all, if not all, crypto tokens are securities, and that they, as well as the platforms and custodians dealing with them, are subject to regulation under the federal securities laws to protect investors." So they're trying to protect me and you from crypto. They're trying to protect new investors from coming into crypto, right? But right now, Bitcoin is sitting at $30,000. Why is it sitting there at that price? Because people are getting away from the banks and they're trying to beat inflation at the same time. People want to get the most gains they can possibly get from their money right now. The reason that they're using this SEC, they're using every possible means that they have available to keep people out of crypto, is because they know crypto is the one thing that's going to help these people get ahead. That's what it comes down to. And they're trying to keep as many people in the broken banking system that they possibly can as well, because that system's about to go down and swallow everyone's wealth with it. I think anybody who has enough, vision to see how crypto could enrich them very fast at a time like this, because I believe this market is starting to turn around now. This is the time you want to get in. These altcoins are sitting at very low prices still, undervalued. Look at XRP. You get in now and you might not have to wait so long. I've been waiting years for this to happen. Most of you have as well. This is your final warning. It is not going to get better. In fact, it'll get exponentially worse. What is the best way to outpace inflation and the continued debasement of fiat currencies, precious metals, and crypto? And they're mad right now because they see people waking up. They see people rushing to get into Bitcoin now. They see people breaking away from the bank on a daily basis. That's what it comes down to. Now they're going to really amp up the narrative. They're also going to amp up the SEC and their crackdown on crypto. I'll talk more about that in another video. But anybody that you know right now, family members, friends, you got to tell them to get into crypto while they still can, because what's coming next is not going to be good at all. I believe hyperinflation is going to come and visit all of us by the end of this year. But with that said, I'm going to wrap up this video. I want to thank you all for watching. I appreciate all of you watching my videos. We'll see you in the next one. Have a great night.